The year was 2006, 2008. We are talking around that time, which is roughly say 17, 18 years ago. And in a mail that Ramalinga Raju sent to the Securities Exchange Board of India, he himself admitted to a host of misrepresentations and fraudulent activities in his company, which at that time was known by the name of Satyam Computers. And that particular fraud rocked the Indian markets. Why? At one point in time, Ramalinga Raju even said that he felt he was riding a tiger, and if he gets down that tiger, he knew that the tiger would end up eating him. And this created a whole list of issues in the financial statements of Satyam Computers, and the misappropriation and the misrepresentation reached such dizzying heights that in his famous quote, as he often said, nothing on the left was right and nothing on the right was left. Now, this statement became iconic in its own way. You know what is there on the left side of the balance sheet? You have your liabilities, your sources of funds. He was saying nothing on the left was right. It was all misstated, and nothing on the right was left. The right side of the balance sheet, the old T form of the balance sheet, right side is all application of funds, basically your assets. And now he was saying that nothing on the asset side was actually left in the business. They were all misquoted and over-quoted, for lack of a better word. You know what he did? Over a period of 5 to 6 years, Satyam Computers, they wanted to raise funds. They kept on inflating the revenues and inflating the debtors in the balance sheet. What actually happened was certain employees of the company raised fake invoices to the tune of around 7,500 crores worth of fake invoices that were generated by the company, and because of which the sales value, the revenue figure also went up, and the figure for trade receivables or debtors also went up. Now, these were not real receipts, these were not real sales, and everything that was presented in the financial statements was very clearly overstated, misquoted and misstated. And when this fraud finally came to light, the whole machinery came tumbling down. There were multiple arrests that were made, and the SEBI report somewhere pegged the amount of fraud at 12,318 crores plus. You can imagine the quantum of the fraud and the impact it must have had on the company. The company later, of course, was acquired by Tech Mahindra. It became to be called Mahindra Satyam, or Satyam Mahindra, and of course it was later on merged with Tech Mahindra itself. Tech Mahindra today, as you know, is a listed company. But imagine the number of arrests that happened. And let me tell you something about the Satyam scam. You know, it was not something that started off with an intention to deceive someone. It was not something that started off with a deliberate intention to defraud someone. But one mistake or one desire to window dress the financial statements, the desire to overstate numbers for raising further funds, the directors could not control it and it got out of hand. Defrauding the investors, defrauding the public was never the intention. They had the best interests in mind, but as they say, one lie leads to 20 other lies, and each one of them keeps on getting multiplied, and that is exactly what happened in the case of Satyam. And the Satyam scam or the Satyam fraud is a lesson in audit. It's a lesson in internal audit. It's a lesson in corporate governance. It's basically a lesson in all the aspects that a chartered accountant or an ACCA member studies in the course of his academic journey. Internal audit failures, internal control failures, complete what's the right word sometimes, complete disregard for the provisions of accounting standards, and a fraudulent mind which, had the auditors and other people applied themselves to the job, they would have unearthed these scandals right there. Maybe they did, maybe they did not, we don't know. But some of the signing partners were behind bars for a decent chunk of time. This Satyam episode teaches us one very important lesson. And what is that? the urge to raise more money, and one fraudulent misstatement in the financial statements, before you know, it will have a snowball effect and it would have metamorphosed into something so huge that you won't be able to control it. So when you are investing in companies, when you are looking at companies, you should be on the lookout for these markers. Has the revenue suddenly risen? Has the balance sheet suddenly become very strong? Do you also see a certain amount of disproportionate increase or change in all the important parameters and ratios in the financial statements? Have all of them suddenly become very healthy ratios? These are questions that you should definitely ask yourself when you are doing a comparative analysis of financial statements. As an investor, your safety and the safety of your money is in your hands. Download the Plutus Education app.